So today we're going to go and do a little lunch and learn with Citibank. I'm glad everybody is here. Anna's going to join us soon. We got a couple agents that are running late. Today we have Joaquin and we have Renatta. These guys are the head ups in the branch. Well, not the branch, but the management aspect of it, right? The business management aspect? Yeah. At least for this region, right? I'll give you guys more credit. So I'm going to give them the floor and come on up.
So good morning, everybody. Thank you so much for coming this morning and taking time out of your day to listen a little bit to what we have to offer. We do realize that your time is precious and that you do have various options. So we're here to be focused on certain specifics that we talked to Carlos about that we felt or he felt that could benefit you and your clients. So we're going to be talking about a few products that we offer. Some of them are niche products. Some products that I'm going to mention, you might have heard out in the marketplace, but I'm going to let you know what Citi does a little bit different on there. Your Citi team would be myself. I'll be your contact as the regional representative in Citibank for what is 30 branches that don't have a physical loan officer in it. So what does that mean is that my team is remote. So 21st century, number one lender in the nation is who? Does anybody know? Quicken Loans. No boots on the ground. No motors, no brick and mortars. Why? They found a system and it works. Okay? It's all digital, it's online, it's all over the phone. Okay? So we're mimicking that system on 30 of our branches. We have 54 branches in the state of South Florida. So I manage the relationship with those branches and the set of influences in the areas like yourself, since given that you have a branch right in front of us, to connect you guys and your clients to my mortgage representatives off-site. Okay? So you have Renatta Delgado, Strategic Business Development Officer here. She's focused on community lending programs and products. What is community lending? Or CRA, right? Banks are required to lend to specific areas, to specific people where they bank, right? Where they have a physical presence. Her responsibilities will be to make sure that we're doing that. We're lending, we're providing the products and the offerings to all those clients that are available that are qualified. And you have, that was not able to come today, Daniel Alfonso. He's the branch manager at the branch site downstairs. So he'll be your contact if you need any banking assistance. He'll be your contact to go to as well, okay? So we're gonna start real basic. So real basic. So I like to start with the why, right? Why do we do what we do, okay? I know why I do it, but I ask all the people that I ever talk to, is like, always ask yourself that question, right? You start with the why, you understand why you're doing things, your passion comes out of it. And you get to do it much more easier, it kind of flows more smoother, and then business just kind of gravitates to you, right? So when we talk about mortgages, which is what we're gonna talk about, the first thing that people ask is like, when it comes to Citibank, is that you guys do mortgages? So how many of you guys here knew that Citibank does mortgages? All banks do, right? That's kind of like the common sense. But it's funny enough that we talk to a lot of people that look at us and say, no, you guys just do credit cards. You do high net worth clients and do a lot of investment stuff. No, we actually do mortgages, right? And we do it well. So we're out in the marketplace as a business development officer, as a regional lending specialist, promoting the products that Citi offers. Okay? I tell you guys, you know, one of the things we want to do when we're talking about mortgages is setting the expectation to the clients. Expectation is critically important because it sets the process moving forward at ease with the client. Clients and you guys always want to know where you are in the process, but not knowing what to expect within that process puts them on an unfamiliar territory where they're now hesitant and they're anxious and they're always questioning and asking. So setting expectations from us is critically important. Okay? We're given a great opportunity to do what we do, to help someone become a homeowner. As realtors, you guys are on the purchase transaction, right? We do refinances as well, but obviously that pulls you guys out of the equation. But you are the person that is with the client at their biggest moment in their financial history, in most cases, right? This is going to be the largest transaction they're going to put through and the biggest debt they're going to take on. So it's important that you take on that responsibility and know that what you're doing for them is going to be something that is going to mean, the world, and it's going to be for at least 30 years, right? Because we're looking at a mortgage is going to be 30 years long. So one of the basic things that we talk about before the clients actually starts home shopping, we want to set those expectations, right? We want to make sure that they know what it is that they're going to be buying. We want to make sure that they know what they can qualify for. We want to make sure that they have all the aspects of the financial transaction in place to be able to get qualified, okay? A lot of clients come to you first, though they should really come to the bank first, right? They should really get the pre-approval first. And that mindset is changing little by little, but we still find a lot that our clients go first to the realtor, and then somehow the realtor connects them to the lending specialist or to the bank or the broker to get them the actual financing, right? So, and that's fine, but if that's the case, then you guys got an opportunity right off the bat to set the expectation and go over certain ideas or certain points with them to really get them to understand what's going to be required of them as a potential new buyer in the marketplace. Okay? And again, we're going very basic here. This is kind of Mortgage 101. So some of you guys with this, you might have heard this a million times, but it's critically important, right? That we're talking to our clients, first, especially our first-time home buyers, that need the most hand-holding, that have the most questions, the most doubts. They're really going into this blindly, and they are expecting, and they're really putting themselves out there on our behalf to make sure that we kind of guide them through the whole process. So it's important that we go through with them on these aspects up front so they have a realistic expectation of what the process is going to be and what they can expect to purchase. And ultimately, the initial process of that pre-approval is to give them that sense of reality, right? Because a lot of us, or a lot of the clients think, they know what they want, but they don't really understand what they qualify for. Okay, so it's your responsibility as the realtor, as the first initial contact to the client, to kind of discuss that. And these points that I bring up here are some of the things that you should discuss initially to kind of get them in that mindset of, okay, so this is what they're going to be required of them. So one basic thing is as simple as, what is a mortgage? Right? So obviously it spells it out there for you, but a client doesn't understand what they're getting themselves into. They just understand that they're going to get a loan. Right? Does anybody really understand that it's not just a loan? This is someone's life. They're signing their 30 years away, right? Their biggest debt. So they should, right? There's 40 pages when they go to a closing table. And nobody ever reads any of that stuff. And that's fine. I know I didn't when I first bought my first house. So it's up to us, you as a realtor, us as the lender, to make sure that we educate, inform, and advise our clients properly so that they understand what they're getting themselves into. So a simple promissory note is as simple as that. Somebody promises to pay back a debt, okay? And that debt is going to be secured by that collateral, that investment, that property. So if the bank doesn't get paid, that property comes back to them to be able to cover their loss. Okay? This is in simple terms, but it's a big shocker to make sure that the client understands that it's a big responsibility. A lot of people that have been renting for many years, that shift over, we want to make sure that they understand that now the responsibility is on them. All the maintenance, carrying costs, making sure that everything's up to date. Okay? And the mortgage, obviously, above all, is their shelter. They want to make sure they're taking care of that. So I put here a slide to talk about what it is that us lenders look for, right? The underwriters look for. So in a lot of cases, the client comes to us and then we give them a number, right? We review their numbers and we give them a number, and they're not happy. Well, I wanted $500,000. You only qualify for 350. They don't understand all the equations, all the things that go into it. We do educate them. But again, as the realtor, as the initial contact, and as the one that has the client's ear, it's always good for you guys to understand what it is that we're looking at. So when the client goes back to you and says, oh, they only qualify me for this, I'm not happy, you can also explain to them what it is that we're reviewing and considering to give them that determination, to give them that ultimate number. Okay. There's two primary ratios. The front end ratio, which is the housing ratio, and the back end ratio, or the total ratio. These are debt to income ratios. Anybody heard of that before? DTI, the big DTI, when it goes up and you exceed it, and guess what? The loan down gets paused and possibly declined because new debt came on board, income wasn't calculated properly. You guys have been doing this for a while, know that that comes up. And it's one of the primary factors in the underwriting review to determine the client's qualification. So it's critically important that we do this correctly and that we review it with all the information up front. So the housing ratio covers what the mortgage is, right? When we talk about the mortgage, it's not just the mortgage in terms of the payment for the loan, but also what else is included in that debt. Taxes, insurance, association, flood insurance, mortgage insurance. So there's several things that need to go added on there so that you could calculate what the front end ratio is going to be. Okay? It's important that the client understands what that number is going to be. Okay? And that number for a person that's been renting, there's what I call a comfort zone, what they're willing to go up to. Right? They've been renting for many years, they've been paying $1,200, $1,500. They can potentially go up to $2,000. Well, that's a $500 difference. That's a big change. So making sure that the client understands what that front end ratio is going to be, and that how we come up with that calculation for us is critically important. It's one of the first things I do when I talk to the client is I talk about those items, right? What's your income source? Where are you coming with where am I going to see my repayment funds come from? And what are your credit and debt? Okay, based on that, then we work ourselves back to what's left over that tells you what you can actually afford to qualify for. Right? So the housing expense is critically important. Then we also go back to the back end ratio, right? The back end ratio is really the one that we want to analyze because this one's going to include everything. Because you can qualify on the front end, and then the back end, guess what? You have a car loan, you have student loans, you have credit card debt, you got personal loans, you got student debt, and that starts adding up. And I did a quick example here. Okay, look at the bottom, a $60,000 client that makes $60,000. Typical person in Miami-Dade, a single person, $60,000, right? Okay, they normally want to buy Miami-Dade, area medium income or area medium sales price is $350,000. So I use a $350,000 purchase price there. That's for the Miami Herald back in May. So from the looks of it, at $60,000, they make $5,000 a month. The back end ratio, we put it at 45%. That gives me a total of $2,250. That looks like a hefty number to be able to qualify for a mortgage. And based on that number, you would think I could qualify for a $350,000 house. But when you start adding what is included on that payment, and you talk about the principal and interest, the taxes, the insurances, the association fees, which I don't think I even included in there, mortgage insurance, because you only put in 2%, right? You're doing very minimal because you're a first-time home buyer. If you have flood insurance, okay, all these things start adding up, and the number now exceeded that $2,250, and the client no longer qualifies. This is not even considering, do they have a car, which in Miami everybody needs to have a car, right? Most people have a debt in a car, either a lease or a loan. Do they have credit card debt? Most people have credit card debts. Okay? So you start adding that up, this number is going to go even higher. Therefore, now you're completely out of that ratio. Now, for you guys, what option would you suggest could potentially assist a client that doesn't qualify under these conditions? Anybody?
Pay off their debts, and pay off their credit card first before they open insurance.
Pay off some debt, right? Because that's something that they have control over, right? Income is something that goes up gradually, right? And that's not many of us that could jump from, $10,000 to make these numbers work. But debt is something that we have control over. We could lower our debts by either paying off those as quickly as possible, getting the tax money, covering some of that. Okay? So there are certain things that you can suggest that we advise the client to do to qualify. So it may be that they don't qualify right now, but that doesn't mean that they don't qualify, period. And we're going to tell them what they need to do or what suggestions we can give them that they should do to qualify, if not now, but later. Any questions on this? Is it clear on what it is that we're looking at, how it is that we compute kind of these math? Does everybody kind of, this is really basic, you've been doing this for many years? Yes, I see a lot of nods. All right. So this is what we're looking at. The client's financial picture. These are all the different things that we're going to consider when considering the client for qualification. Okay, we're looking at that client and saying, yes, you're pre-qualified, you're pre-approved, you can move forward. One thing I'm going to mention that I'm going to take a step back there is when we're doing the pre-approvals, what we normally try to get up front is documentation. When we get documentation up front, we issue a conditional approval. That's straight from an underwriter. So the paperwork goes in for review, underwriter reviews it, comes back with a conditional approval. Or if there's additional requirements, they condition it at that point. That's at the very beginning of the process. That's not after they're under contract, that's not when they're looking. No, we want to get that up front. Because with that already said, you got about 40-50% of the process completely done when you get a credit reviewed, income approved, and assets cleared. If you get those three items up front and you have a conditional approval from an underwriter, there are very little chances that you're not going to be able to get approved fully with that transaction. Now, obviously, there's other things in the transaction that we have no control over. Property has issues. There's a million other things. But in what we can control, which is the client and their aspect, we can get that reviewed and cleared up front and approved by the underwriter. Okay, so we'll look at all these things. Well, not all these things, because some of these will go into the appraisal once we actually have a contract on it. Okay? Any questions on what it is that a lender, I put Citi, but every lender looks at this pretty much straightforward the same way. So anybody who you're working with, if they have some alternative program, it's going to cost the client in some way or another. But for the majority, most banks, most lenders, most brokers are selling their loans in the secondary market, so they have to follow a pretty straight guideline when it comes to Fannie Mae. They're doing conventional loans, they're doing FHA, so everybody ends up back in the same bucket. Okay, so yes, are there alternative programs? Sure. Can they do different things? Yes. Okay, with everything, there's different ups and downs of it, right? Pros and cons. Right. So with that, I'm going to stop for questions and answers. If there's anything that anybody wants to ask, any particular scenario maybe you come across that you couldn't understand why they denied you, how they calculated something with another lender. Obviously, you haven't worked with us just yet.
Litigations.
Litigations.
Do you guys have any problem? They just say there's litigation on the building itself. What is it you guys would need to know to move forward with the closing of the property? Or you guys don't do any properties that have litigation on
You
them?
can't have open litigations, right?
So if it's something, the litigation is structure-wise, on a content review, if we're reviewing a content, it's a structure issue. I'll give you an example, Latson River has a fire sprinkler litigation open, we would not be able to work on that one. So if there's something as far as like slip and fall or something that's on a per-case basis, but if the structure and safe sound of the building, we will hold until there's a resolution set.
Okay, so resolution, not in case of like if the insurance can cover it or if it's covered already.
No, it has to be resolved. It has to be cleared. It has to be recorded.
Okay.
Yeah.
Questions? Anybody else have a weird situation trying to close a financial deal?
You have multi plans, you guys are awesome.
Because who you guys working with? 'Cause
And then,
Did you guys mention about, well, that's not a situation that I will follow to, the ratio of renters to, owners, occupancy? Is that a specific number you guys look at?
for the condos review,
Condos in this case, yeah.
yeah, it's 45% firm,
for, no, that's 5149.
5149.
Oh, 5149, okay.
So majority
Majority.
owners.
Okay.
Yes, sir.
Do you have any special programs for doctors in residency that are not yet making a lot of money, but who will be making a lot of
We
money?
do not. Not at this time, no, sir.
I guess, how would you estimate, like, if you're doing an investment property purchase, and you're gonna use the income from the property as your income
Mhm.
to purchase? Do you need much money, like, do you need as much income if, let's say, you put 50% down? You still need to qualify fully on the income if you have other assets. And I guess the question is, if you do short-term rentals, and the income will be more than the monthly rentals, can you actually consider that or not?
So it's a two-part question, right? So the first question is that we would use so I missed the third one, so I'll go back to that one. So we would use the rental income at 75% of that income.
Would you use the annual income or your projected, like, short-term rental income?
So what do you mean short-term projected?
You can make like quadruple or even more, 10 times the amount if you short-term, like a house versus rented annually.
So you're talking about like if you're doing like Airbnb kind of style stuff? Okay. So I'm gonna have to pause on that one because it's still a little bit of way over the Airbnb calculations. And I'll have to come back to you with that.
Okay, and then my other questions were, if you're putting a lot down, let's say you're putting 50% down in the house, do you fully need to qualify on income, or will they use the security of the house?
Yeah, you still have to qualify. Everything in mortgage is based on repayment, so whatever the loan balance is gonna be, that's what we
And
go.
then can you qualify on the assets instead of income?
No. We do have asset-based lending, but that's for our high mortgage clients that are over 10 million. So with us,
Okay,
so
so
that's the only way that we do asset-based lending, yeah. Yeah.
No matter how much down, even if you put 80% down and you want 20%.
So you gotta be able to qualify for that 20%, yeah. You have another question?
I was just gonna comment, I've received loans before based on my Airbnb income, and they would not look at my projections, they would only look at Airbnb income as actual salary. So what I have to do is show them my 1099 that Airbnb sends me.
Right.
And that's basically like, this is my job, this is how much I get paid, because it needs to fit in the box, there was no box for short-term.
Right, but that's something that's already history of it. In your case, you were buying into it.
Yeah.
Yeah, so how do we show history there? Right, so,
You need to season, you have to have the property for a while.
yeah, exactly.
Can't do it based on a projection.
Right.
It has to be seasoned.
So he's already come across it.
So initially, we would just estimate renting it out kind of annually. You see
Yeah.
that income.
Yeah, I think that's, you always gotta paint a picture, right, for the other way. And sometimes, if you get a little complicated, it's always catch worms, and that's when you get a little, kind of put into a corner. So if you can present the opportunity in the best sense, that's what I would suggest.
Yeah.
With any limit you're going with, because the underwriters are really black and white. I mean, they go, they try to be flexible, but at the end of the day, they have to cover themselves. And there's only so much room they have to play with, and it's very thin.
Yeah, I joke about this, but it's kind of true. I'm like, if you're gonna apply for a mortgage, do not cheat on your taxes.
Oh,
Just
definitely.
pay everything.
Yes.
Because a lot of people make a lot of cash.
So I was
And
gonna say,
I see this with contractors all the time, they're not even like depositing the check,
Right.
they're going and cashing it. And I'm like, but you're losing money by, not having a big enough mortgage that you could qualify for. if you-
so it goes back to when you guys have these initial conversations with these clients, educating them, advising them. Hey, if you're self-employed, first thing you want to do is let me see your taxes. I mean, let's not even talk about what house you want, because you could tell me you make $1 million, but at the end of the day, how do you report it to Uncle Sam? That's how we're gonna look at it. And I have many cases with very wealthy people that feel that they should have had an issue. But for all their life, they bought everything cash, and all of a sudden they want to finance something, and guess what? They're negative. And they have the bank accounts with us, and we have millions of dollars in banks. I know they make money, but they don't report it. And at the end of the day, it's what's in black and white. So yes, advise your clients, if they want to buy a house, if they're getting ready to do that, they're gonna have to buy the bullet for at least 2 years. You know, some people take 1 year. Okay, sometimes that 1 year doesn't work. It gets left up to the discretion of the underwriter. They ask for the second year, and there's a bunch of losses, and ratios come down, and there goes. So yeah, see it all the time. I don't know if it's down here. I talk to counterparts in other markets, and they get a little bit of that, but I feel like we have a lot of that. So just consult with your clients, educate them, inform them, and give advice.
Do you care whether the credit card debt is settled or paid off in full? Does it matter to you?
No, that's also clear. Okay. Now it depends if it's a real estate related, right? So I had an issue, a timeshare. Now they were sending back the timeshare or giving back the timeshare. There was a period of time where there was no payments made, and it got reported as a collection item. Okay. Again, the underwriter is going to look at that and say, well, are these mortgage liens? They did not pay the payment to the timeshare on time. It's real estate related. Because remember, we're giving you out a loan on a real estate transaction. Anything that's mortgage related or real estate related is going to cost more of an issue. So we got to make sure that we look at that. Okay? If it's other accounts, credit cards, and things like that, as long as it's settled and closed, it's fine. Carlos, do you want to pause here to have them grab their food?
This is the first half, which is the mortgage, the basics, and the second half is more the specialty.
The programs.
That you guys have. Since the food kind of got here midway, let's take a break and get some food.
Yeah.
And then we'll continue.
And I don't know where everybody's gonna sit, but if you didn't get one of these folders, please let me know. And then we also have the bag.
So we're going to continue on the second part, which is the specialized programs that Citibank offers. And for that, I'll give it.
Thank you guys. I hope you enjoyed your lunch. So I'm going to cover with you. I'm going to cover what I do. So I am the business development officer for the South Florida region. I cover Palm, Broward, and Dade. And what I do is make sure that our loan officers, our team, and the banks are familiar with our community lending product. So as Joaquin mentioned earlier, and somebody said the banks do mortgages. We do it, right? So we do mortgages, right? And so banks we have to make sure that we are lending either to low to moderate income borrowers and or that we're lending in low to moderate income census tracts. We have to lend where we have a presence in. So as Joaquin mentioned, we have 52 branches, and when you see our 52 branches in the South Florida area, that's where we have to identify the low to moderate income census tract, and where we actually have a dollar figure for each county for that low to moderate income cap. To address that, Citibank has a product called Home Run. It's an exclusive portfolio product for Citibank. It is designed to be able to have financing availability for our low to moderate income borrowers and for those census tracts. It is fixed rate. It has no mortgage insurance. And it requires a first-time home buyer education by an approved provider. So how many of you know that there's an FHA with 3.5%? Well, Citibank is 3%, and we have no upfront premium insurance for that, and it's not at the back end either. It is, the specialty is that you don't have to be a first-time home buyer. You can actually, as long as you don't own a property at the time that you close, this product is for you. So it's for our first-time home buyers, but it's also if you're selling your property and a month later you're buying, or a day later, you're buying a house, this product is for you, or for your clients. So
the credit score for that particular?
Oh, coming right up. So permanent highlights: 97% loan to financing, no mortgage insurance, fixed rate. For a single family home, you have to have a 640. For condos, is 660. So it's not too high or not too low. It's, if you have a 640, you're, C plus in the credit world, and we're looking for that. It's fixed rate, like we said, and the qualifying factors: income or property. So for Miami-Dade County, the income is $42,000 or below. Broward is $52,000 or below, and Palm Beach is $54,000 or below. And that's kind of hard, right? Because Joaquin mentioned $60,000, you kind of tight on income, but if you think of $41,000 for a household, you're buying even less house. So we also look into where the property is located. So just so you know, you guys are sitting in a gold mine. There's lots of pockets in this area that are considered low to moderate income census tract, and which means that, which is a title that we get from the FFIC, that any bank, we're not creating these lines, we're not the ones saying you have to buy here. These are census tracts that are provided to us by the FFIC, and we are just, abiding by them. So, next. Property types: single family homes, condos. It has to be a homestead property. So, with that being said, we have clients that may be moving in. I don't know if you're seeing this. We're from New York and whatnot, and they're moving down here. As long as the property is homestead, you have to reside on that property to be able to qualify. Down payment: 3%, but only 1% has to come from the client's earnest money. So the two other percent can be a gift. It can be layered with the down payment assistance program. So 1% is a 3% program, but 1% has to be from their own funds. Home buyer education. So we make sure that this client is educated and that they are participating with an education course. We have partnered up with several nonprofits organizations that are in Miami-Dade County. So I don't know if you guys are familiar with housing counseling agencies, but they help clients with credit. They build them up. They kind of get the mortgage ready, and then they send them out they give them a class, and they send them out to the world to purchase. Well, out of all these, we have about 3 that we have selected, and we partner up for Miami-Dade County to be the education provider for our program. And if you have any questions, usually Joaquin, which is the person assigned to your office, he'll be able to let you know which is the closest location. So for us, for this location, the closest nonprofit that we use is Neighborhood Housing Services, which is by the Martin Stadiums, or Opalaca CDC. So, they're within this range. And a lot of these nonprofits offer online classes. So we usually tell the client, if you go in person on a Saturday, it's free of charge, but if you actually don't have the time or want to be able to, do it at home, then you can call the nonprofits or organizations, and then they offer classes online, and there may be a fee associated with that. Next. Okay. What's special to us, so Citibank, we have something called lender paid assistance. So if you are a low to moderate income buyer, or you are buying a low to moderate income census tract, we will provide $5,000 toward closing. So, and you don't have to use it with a home run product. You can use it with FHA, you can use it with VA, you can use it with conventional. This is what's very niche to Citi. This is our product where if we are putting in our address into our system, once we have a loan approved and we identify that it's eligible, the class immediately gets $5,000. The requirement is that they have to take this home buyer education class. So the in-person is free, or I think the highest I've seen is $100. So if they do either or, they'll be able to apply for those $5,000. The classes are usually 8 hours online. I know the modules you can take one module at a time, and there's some testing that's involved. But it's usually 6 to 8 hours that HUD requires that class to take place.
You have to finish the class before you can apply.
No. So, for instance, you come in, we apply, we put in the address in our system, we know that it's eligible for the lender paid assistance program, then we'll go ahead and code it internally, and you have to have the certificate prior to closing. So, as soon as we know that the property is eligible, we're telling you, go take the class, in person or online, give us a certificate as soon as you have it, and then we'll code it correctly inside, internally with us.
There was also, I'm sorry, there was also the class, just the same class, I think, for the home.
You
run
got it,
program,
yeah.
And is that the same program?
Yes.
Just
So
has to
that's
be
it.
done before closing?
Correct, as long as it's done before closing, so it's, that is, you cut on to that. So you may be doing home run, or you might think you wanna do home run or not, but then maybe something happens, you put more income, in place, and then we'll change the loan to an FHA, or we're not conventional. But the same class that you took for home run is applicable for the lender paid assistant. So lender pacing is $5,000, goes toward closing. In case that you're using another program for down payment assistance, we actually can use that $5,000 to buy down the rate. So that is special, especially to us. I know that there's, we actually walk the client through that you won't see it in the closing, in the lender, on the loan estimate. You see it at the closing, on the closing statements, on the closing part.
Just want to make a quick comment about the home buyer education courses. Anytime you have a first-time home buyer that is green to what is buying a property, I always suggest it. It's a lot of information, but it's a lot of good information. You know, if it's a good client, it's your client, you're not gonna lose them, because they do, other professionals show up, other realtors do go, you know, the lenders go, I do those classes, we do those classes, you know, but they get informed, and you wanna work with a client that's informed. Better educated, it's gonna be a lot easier. Again, they set good expectations, they understand the process, so it's a better client to kind of work with through the process.
Yeah. Okay. Another thing that Citibank does is that we actually participate in down payment assistance programs. So how many of you know that there are programs in this city, in Miami-Dade County, that can help with either down payment or closing? Have any of you used
I
them?
only know Broward, I don't know if the ones.
Oh, okay. Well, yeah.
I just checked both of them, and I think they're both out.
Which-
Like, they don't have any more money, so I think it's gonna get released in a few more months or something.
Miami-Dade?
Miami-Dade?
I checked recently both of
The,
the counties.
the most used programs in Miami-Dade almost never run out. I mean,
Yeah.
they just,
What is it called?
So with Citibank, there's many programs, but ones that we're currently active in is City of Miami Beach. And they provide up to $150,000 for buyers. There is a process in place for City of Miami Beach. There's an application. It can take anywhere from 3 to 6 months, but it is money available that's out there if you're working that market. City of Miami provides up to 96. So this is City of Miami. That provides up to $96,000, and City of
that might
Miami.
be City of Miami.
Is it free money or this is a loan?
Depends. Different programs are grants, others are,
Okay, the grant program is the one I'm talking about that doesn't have any.
Well,
But-
City of Miami Beach, it is, all our kind of loans are soft second loans that are silent, and when you meet the requirement for that program, then they're forgiven. Yes, correct. So City of Miami Beach, City of Miami 96, and that one I know it's always like first come, first serve, and first ready. There is probably always a, I don't want to say waiting list because they don't keep a waiting list, but it's usually, once they get the money, that's usually the program that the money runs out within the announcement that they do. The other, yes.
Down assistant program, I know finally goes at the home path a lot. And then for the assistant for 100 PPA, I think it has to be specific property, because I think they run the program for pot, right?
No, so the city of for Miami-Dade County, we have, I'll talk about the ones that we're working with. City of Miami Beach, you can purchase anything in Miami Beach. You just gotta go through them to make sure that you're an eligible buyer. City of Miami as well, they have a process where they do an intake and review. And the third is Miami-Dade Economic Action Trust. A lot of people call it MDEAT, or formerly known as MAP, Miami Metro Action Plan Program. And that program provides up to $7,500. That is the most used program. It's never runs out of funds. I think on a yearly basis, they do 280 loans a year on assistance. So usually that program runs in conjunction with the lender. So the lender usually does the qualification, does the program. Once we know maybe the client is maybe short of money or needs a little bit more money for closing, then we'll go ahead and put the package together. So the lender takes the responsibility to make sure that we're collecting the documents, which sometimes are very similar to what we collect for our loan process. help the client with the application, and then the lender is the only one allowed to submit the package to the program. And the only one allowed to correspond back and forth with the program, and usually that takes, I would say if we're gonna work with that program, I would add a week to be safe, 2 weeks instead of a 30-day closing time period. I would say 45 days, just to make sure that there's no delays in it, because it is from the time starts from the time that the package is submitted. So like, let's say the client signs a contract on Saturday, but we don't know until about Wednesday, and we have to get the package together, and we submit it on Friday. That's a whole week that passed before a package can be submitted to the program. And that program usually you can actually layer that program, the $7,500, with our $5,000 lender pay assistance. So for Miami-Dade County, that's the one that we probably work the most. Currently right now, I have 3 files with City of Miami Beach, and I can tell you that it's been a couple of months, and it's client-based, you know. We're waiting on client to make the move, to actually get a contract, so.
And it has to be approved before closing, right?
Yes, yes. So all these programs for City of Miami Beach, the client will actually get a letter saying that they have been reviewed and they're eligible. So we kind of, when we take the client, we'll know that they're already in process. Or if we're submitting the file to the program, we know it's going to take a while before they're going to come back. So they do talk to the client, they do interview them, and they collect the package for review.
I know that eligibility is based on family size and income.
Yes.
How is family size determined?
So usually, depending on the program and how deep they look into it, they just basically ask you, are you married or single? How many people are living in your house? How many people are planning to live in the house?
So age is not a factor. If the people living with you are your mother or father.
Well, if you say, yes, my mother's living with me, but she receives Social Security, okay, that's income. So she's part of your household, so now you're a family of 2, and now you have your income and your mother's income counted toward that. For the lender, it's a little bit different. We have to screen that. We do applicant information. And then when we know the client is going to be interested in a program, then that's when we ask, okay, who else is going to be in the house? Because the program is going to ask that question. We won't ask, but we want to make sure that we gather everything as much as possible so we can submit a package correctly.
So this goes back to the very beginning. With these programs, you have to set the right expectation. They are tedious, they take longer, they are time consuming, they're just hard, okay? But they are doable. Both Renatta and myself come from a nonprofit background. I made a living doing it, okay? And a good one. So I tell you, just make sure that the client understands what they're getting themselves into. You make sure you know what you're getting yourself into, okay? Because the process does require a lot of hand-holding, a lot of moving back and forth. There are 2 layers of approvals, and if we're stacking multiple programs, then there's 3, even 4. So it's important that we set the right expectation with all parties, right? Because the seller's also on the other end waiting to get his money.
And I'll add to that, I don't know, I'll answer, but and then to add to that, there's also, depending on the program, there's certain title companies that you could use or cannot use. So depending on the program, you know, I have a file yesterday that came in from City of Miami Beach, and that's the first thing we looked at. You want to be able to use this company, but then they want to use the MD program. Well, that title company is not approved by one program, so that's where the lender, we need all moving pieces and all pieces to know the information and be very transparent and very clear in the communication on and set an expectation on how long this might take. But do they close? Yes. Are they successful? Yes.
So that's regarding the buyer, I guess buyer side qualification. As far as the property is concerned, you had mentioned condos. For the condos specifically, is there any different requirement outside of like a normal full review that will need to be done during the process?
No. In most cases, they're going to take the lender's full approval.
Okay, so it's the same. The full review would be the same regardless with or without the program. Okay.
Going back to the down payment assistance programs, what you need to know is that all programs require that the client is eligible for a lender, that they have an actual approval from a bank. Sometimes by a bank that's working with the program, sometimes it's called approved lenders, or that they have that qualification in place. So before they say, I'm gonna get $100,000 and I'm gonna get this $10,000 and put them together, it doesn't work like that. They have to be approved by a lender and they have to qualify for that mortgage before we can start putting all the pieces of the puzzle together. So for Broward, we participate in the Broward Housing Assistance Program, City of Plantation, a couple, I think there's one more, City of Plantation and City of Fort Lauderdale. And for Palm Beach, we work with the Palm Beach County SHIP and the Workforce Program. So if there's others out there, usually my job is to be able to get the information, review it, identify risk, and then submit it for approval. Another thing that we do is make sure that we are reviewing programs on a yearly basis. So if maybe it worked in 2017, but maybe the language now it's not going to work, and so we try to address those situations as they come about. The great part is that we can layer that, like Joaquin says, we've done this in the past, and we're able to get our product, our loan product, the down payment assistance, maybe one or two available if there's funds, and then also put our $5,000 into that particular mix. Just so this is basically our home run is our community product. We can actually go into any assistance program, and at the end what we have is affordable housing that can be sustained by the buyer, which we all want, right? We want to sell the house and make sure that they stay in the house for the 30 years that they're going to be there. We do this by working our relationship with our realtors, making sure that you know what's out there and how we can combine them together to reach home ownership. Questions? I know you're going to have questions. Yeah. So I think going back to the condos, we do, for when it comes to these programs, and somebody's buying a condo, and I'm seeing that more and more in the city of Miami Beach, right? Because that's why we have condos. The process is the same. Us, the lender, we have to review the condo. We have to make sure that if we're able to work that. The city of Miami Beach is going to take our information, and they will also make sure that the client that's purchasing is that this is not a building that in a couple of months they're going to add a special assessment and no longer able to be paid by the client. So they also look at that information as well.
I think more importantly, for the program that you mentioned, consider that as a tool to use when you have a client that might be willing and capable, monthly payments, to buy. In other words, they don't have to leave the cash to initially put the down payment, but most places the rent that you're repaying is more than the actual mortgage you're repaying in the house that you purchase. So you can use this as an option. Of course, you refer to the Citibank to see if they qualify, if they can actually, be put into the program, so you can convert it from a rental to a buyer, right? And that's another arsenal for your clients, right?
Yeah. There's a lot of clients that we would say no to because they don't have, that's the biggest problem in the nation, right? The cash needed to close. People can't save. People live paycheck to paycheck. These programs fill in that gap. Okay? So we're going to go over two last things real quick. They're in the folders that we gave you. Okay? I'm going to kind of deviate a little bit from what's in here, just for sake of time. Wanted to talk a little bit. We talked about one spectrum of the financing world, our community lending, the low to moderate income clients, and then we want to talk about our high net worth clients, right, that are looking at the jumbo deals. Okay, City actually just rolled out our 89.99, our 90% financing. It's 89.99, so there is that 0.01 difference. Okay, up to $2 million. It does have MI, but it's discounted, so it's a discounted MI. It also does require that the client have $50,000 in assets with the Citibank. The other thing that we have is an 85% with no MI. The qualifications for these clients are normally in the higher 700 scores. We want to make sure that again, back to the repayment part, doesn't matter how much in assets they have, they do need to be able to show that income, and we do need to be able to calculate ratios, that to income ratios. right? So those are the two programs that we can put up financing, and we go higher at 80%, okay? We could go up to 3 million, and we could go higher up to 8 million and above, but that is on a private wealth side, so that's with clients with 10 million in assets or more. Right? So yes, is City known for high net worth clients? Yes, okay, but we do all types of products, right? So, but if you do have those clients, typically what we found is that clients in that kind of net worth want to talk to a bank, okay? They want to work with someone that they feel comfortable with, okay? And Citibank has been already known for, I think it's 3 years already, as the #1 bank for high net worth clients. Right? So when you're looking at those clients, the other thing is our relationship pricing model. The relationship pricing model for a client that has $2 million with us is going to give them 5/8 right off the rate. Okay? No questions asked. The $2 million needs to be there prior to closing, and we need to see it after closing. Then it's our job to make sure to keep it in City. Okay? We can't force a client to keep it with us. But we will suggest, hey, bring over $2 million, and we're going to give you the discount. Okay? I go right up the top because we were talking about high net worth clients, right? But there's different tiers depending on where they fall. They get a different percentage off the rate. A client that just has an account with us up to $50,000 is going to get $250 off. Past that, you start seeing the discount right into the rate. That could be substantial when we're talking about jumbo loans. We're looking at a 5/8 off the discount. When we calculate that over the life of the loan, we could potentially be talking hundreds of thousands in savings. So we break that down to the client and show them, hey, you have the money sitting somewhere else. We have our private wealth team that can help you manage those funds. Bring them over. We'll do the mortgage. We get you managed. You're a City Gold client. You become a private wealth client. You get all the bells and whistles of Citibank. Plus, you're going to get the discount and the savings on the mortgage side. Okay? We have specialty reps that work with our high net worth clients, that are our most senior reps that have been with City with 10 plus years, that have that relationship with our City private wealth teams to make sure that they elevate that service. Obviously, we try to come across for all clients in that way, but obviously these clients do require, and they do require it, that we take it up a notch. So we do make sure that we provide and present that for them. Any question on the jumbo or the relationship pricing model that we have?
The relationship pricing, even if the client already has a Citibank account, do they still apply for that?
Yes, sir.
Okay, it's not like a new account.
No, it doesn't have to be new money. So we called our clients that have $2 million and told them, hey, you're looking to buy a mortgage? Buy a house, we'll give you a mortgage and we'll give you a 5/8 of the discount of the rate.
Okay.
Yeah, so it's not new money. We like new money.
Yeah.
Remember, we're a bank, so we're all about relationship. We try to deepen the relationship with our clients. We want to make sure that we're giving them not just a transaction when it comes to mortgage. We do want to build a deeper relationship with them. And this is a way to do it, to show them that, hey, we're willing to give you a discount on your mortgage side. In some cases, probably even take a loss, but we want you to bring your deposits over to us so that we can build on that relationship. And this is one of those strategies that we use.
This is the balance after you make the down payment?
Correct. This is post-closing. Yes. Good question. Good question. Post-closing, right? So it's not everybody that's going to qualify for that $2 million, but so I have a client. They have $1 million, but they're putting $500,000 on a $1 million house. They're doing $500,000 jumbo loan. So they ended up on the $500,000. So they're still getting 3/8. So because they're using part of the assets that they already have with us for the transaction, they don't have that $1 million after closing to qualify for the half off, half a discount. So yes, it's post-closing balances. And it's all, it's CDs, checking accounts, savings, investment accounts. We add all that up internally, again, prior to closing and after closing to make sure that the funds are there, and then we apply the discount. Okay? And that discount is applied to their rate, which is on their mortgage, so it's good for the life of the loan. Any other questions?
Has anybody done a jumbo loan before? Closed on a jumbo loan? No? Jumbo, I'm sorry, I wasn't sure. Did you go over what a jumbo loan is?
No, okay. apologize about that. So it might have actually been in one of the slides that I skipped. No, it doesn't say. Okay, so it doesn't say. So our normal clients are falling into the conventional world, right? That conventional max loan limit. So it could be $1 million purchase price, but the loan limit is $484,350. As long as we're doing a loan size or amount of $404,350 or below, it's considered to be a conventional deal. Anything above that is not considered jumbo. When we go to a jumbo loan, that means that now the bank, Citibank, is fronting that money because that money is part of our portfolio. So our pricing on our jumbo deals, guess what? Are actually better than our conventional deals. Sometimes by a quarter, a little more, depending on where the rates are shifting. So the volatility right now with the rates is crazy. I mean, I'm quoting one thing one day, and then all of a sudden they just spike the next day, and I'm having to call them back. So just keep that in mind. We can't guarantee a rate until you have a contract, so that's your job. So make sure you get contracts so they can lock in the rate. The window is small. That window is going to start closing up. Okay, I don't expect that we will have this run for too long. We did have a deterioration in rates actually. Yes, last night I haven't checked this morning. We had an adjustment again, but so it is shifting. But yes, so jumbo is that threshold, 484,350 or above. Anything above that is what we would consider a jumbo deal. And just as an example, that $500,000 deal that I mentioned earlier, that I quoted on the pre-approval 3.25 on a 30-year fix because of the relationship pricing. I don't even have 3.25. I've been doing this for 16 years. I mean, come on, it's good. Like rates are really good, especially if you could match that up with the relationship pricing discount. So let us know how we can help. We are here today just to give you other options. We understand you have options, right? But you always could have more tools in your toolbox, right? So I'm gonna ask one question. I have a little extra gift that I found in my goodie bag. So whoever can answer that. And this is, I'm not even sure. Oh, okay. This is the little charger, little phone charger. What was the name of the community lending program for Citibank? All right, so if nobody has any questions, you have all my contact information is in those paperwork in there. So remember to reach out to me. If you have a client that you want me to review, kind of talk to them, what I do the preliminary legwork. I talk to them, I let you know what I found out. Okay, if they want to move forward, that's when I connect them to my team. Okay, then like any other lender, the HLO, the loan officer takes over it. There's a processor that takes over that once we have a contract, underwriting, and the process is just kind of the same pretty much like anywhere else. Right? So I am your face in the marketplace. I cover Dade, Broward, and Palm Beach. So you mentioned Broward, yes, I'm up there as well. The Broward program that covers 17 of the cities for the DPA is hopefully coming up with some more funds. I just got an email from Suzanne, from the director of that program, that they do have some cities that are getting money, but they won't get the entire set of funds until probably the beginning of next year.
Oh, I thought the fall.
Yeah, she says the fall, but she's thinking. Yeah, exactly. But she's being a little bit more realistic. Yeah. I just got an email from her.
They do have money in Wilton Manor.
Wilton Manor and
Right.
I gotta check the email. I don't remember what are those. Those two other ones. So, anything else?
Yeah, actually, can you give us some insight on the new changes to the location group of condos, ratios, and the extension of the 2-year certificate to the 3-year certificate?
I'm sorry.
Have you read that the FHA rules are changing now?
So I'll be honest with you. FHA is not our bread and butter. It's not something we do a lot of, and I'm not up to par with the new regulations that are changing on that. So I apologize. I don't have that information for you. Okay, we do them, but it's kind of for us as last resort because if we can apply home run rather than do it FHA, when she told you the benefits. Okay, so there's a lot of things to get tied with FHA. you know, the upfront fee, the mortgage insurance for the life of the loan, all those things that really the only benefit to me personally is the debt to income ratio, right? That it gives you a little flexibility. But really, now you're stretching a client that is possibly not the best client to be stretching them. So I personally, again, it's not a product that I first start with. But again, yeah, I don't have that information for you about this.
All right.
Thank you.
Any other questions? All right.
Oh.
We
Package your origination fees and post charge.
We have a what?
So we haven't, I don't know, the package that we got, all your fees that are being charged to the banks?
No, it's not under. It's roughly 1,100. That's the bank fees. Yes.
Okay.
Application, processing fee, 1,100. Yeah. So again, they open an account, they get 250 off that. So it's 950. Okay, so.
That's it, we're good? All right. All right, go ahead, thanks for that.
All right, thank you, sir.
So again, the two parts I want to emphasize is one, the home run program, you can use that as a little arsenal to convert rentals to buyers. And then if you happen to be working with somebody that needs to pull up, what is it, 486 and something change of a loan for the jumbo loan?
484, 350.
That number? If they happen to pull that out, this gives you an extra nugget of like, well, I know Citibank, they can actually discount you on a percentage. That's again, something of value that you offer that maybe another agent might not know about because they don't have the information that you guys have now, right?
And the $5,000 under pay system.
And the $5,000, is that on the jumbo loan also?
No.
On the home run, okay? And then I have a couple announcements, all right? After this, we're gonna do the role play activity. It's gonna be based on welcome calls and objection handling again. It worked great last time. Hopefully you guys can benefit even more today with that. And we also have 3 new policies that are coming into play, okay? We're gonna do an update of the commission and escrow policy. As of right now, if you guys have not read it, it's on the administration docs. We have it where we're working sensitive idea with the escrow aspect of rentals only, okay? Hopefully by the end of the month, I'm gonna revise that and have the new policy on how to work with New World, both with rentals and sales, once we have them implemented into the back office. Another update of that would also be on all, and this is including Home 61 leads, we're not doing advancements on payments for the rentals anymore. So it's gonna be the same thing as the referrals, check in hand. So when we have check in hand, you guys will be paid commission on it. Understood?
How it is now?
Yeah, that's how it's been.
That's how it's been. But we had older agents that they had the old previous where like if you do an escrow and it's an escrow, they would get paid on the commission in advance for Home 61 leads. In this case, we're not doing that only because it's a more complicated accounting situation, both administrative wise and
As of
follow up.
today or as of September 1st?
As of tomorrow. I'm going to be sending out all the documents, uploading all documents on the tab for account, administrative documents, okay? And you guys are going to get slacked, you guys are going to get emailed with the new updates. That's the first update. Second update, we have a new referral bonus for agents. So you guys as agents, if you guys refer a new agent to us, they'll go through a interview process, and if they do get hired, we would give you guys a bonus of $250. As per our previous, we had a revenue share. We're discontinuing that moving forward. However, if you already had been in the previous revenue share program, you have the option to take the $250 or continue with the revenue share. It's one or the other. Which was 5% of the contribution margin. That was paid out to Home 61. Okay? So it's one of the two options. If you already had a retro, in other words, you already got an agent from previous. But moving forward, as of tomorrow, August 15th, the new referral agent will be $250 bonus. Again, you guys will be receiving an email with the form, which is going to be a new procedure where you're going to write out the form, give us a suggestion, and let us know who that person is that you're referring. So we also have that in records. And again, once we hire them, they'll go through an interview process. If we do hire them, it'll be $250 paid out to you guys as a bonus. And now the third one is effective by tomorrow. We're going to be including closing transactional fees for the brokerage for all sales, both on the buyer side and on the seller side. Okay? The fee is going to be $5.95. It's going to be hard-coded on both the as-is and the list agreement. Okay? In regards to that, the best part about for you guys is that we're taking 2/3 of that fee and putting it towards the contribution margin that you guys have to achieve at the end of the year. In other words, 2/3 of what the fee is goes towards the contribution margin that you guys would have. So then it ups up the contribution margin you guys have to hit, which is $15,000 of the year.
So 66% of that would be towards the company's contribution margin of all the agents, right?
Correct, for every seller. Again, everything's going to be detailed, exampled on the email.
But it's $5.99.
$5.95.
Like,
Okay.
you're basically billing the cost to the buyer now?
We spoke about
Yes, so industry standard, there's transitional costs that are applied on transactions. We've never done it because it's never been applied. So we've moved forward to put the applications to it. One, to increase revenue as other brokers do. Two, to cover the cost of administration, cost for closing. And then three, for the benefit of the agents.
Who doesn't cover that? Like, how do you explain that to a client? You're paying 3% commission on your purchase, and I'm gonna charge you another $600. I mean, the seller's paying the commission back.
Correct.
So now the buyer is gonna be like, well, then I'll just
Depends on what's
take someone else.
That will charge them another transactional fee. That's correct.
Yeah, but it's not that high. I've never even seen $5.95.
Let me send
So as soon as I send a as-is purchase contract, they're gonna be like, you know what? Bye. And then they're gonna call another agent, put in an offer, and then we're never gonna know. We don't track all our
But most buyers don't know that there's a transaction fee until they
Well,
get
they
their
will.
CD 3 days before closing.
So they will if it's in the contract, right? So they're signing off.
It's on the contract, on both contracts, yeah.
We put it in the as-is contract that there's a transaction fee at the end, and it's basically part of the
You're putting
closing
in
costs.
additional notes, right?
We're putting in the part on line 141 where it specifies what buyer pays and what seller pays.
Right.
Under other, it'll put transactional fee paid to Home 61 of $5.95
By the buyer.
by the buyer on the as is. And then on the listing exclusive part, we put on, I think it's line 99, where you put the percentage and including dollar amount $5.95.
Yes, and then
Yeah.
you can see it in two places. I mean,
So wait, we're charging sellers a transaction
that's
fee for listings?
Seller, as of right now, we're doing seller
If
transaction.
you want us to lose even more
Yeah.
client, I mean, it's hard enough to work with that buyer, and then you want like another $600 added to their closing costs.
Can I answer her question, please?
Yeah.
First of all, you're the procuring cost of the sale. You show them the property. They can't back out.
Yes, they can. And it happens, sadly, I read this all the time with Florida realtors. It happens all the time, and even if they show it to you, they can do whatever they want. Florida realtors don't enforce it, brokers most of the time will not enforce it, no one will.
And it's
So-
also standard procedure.
I've never actually seen
Yeah.
anyone win the case where they're gonna get the money, so, I mean, nothing is guaranteed unless they're actually happy with you the whole time.
I do agree. My wife went to the work.
Well, again, going back to the transactional fee, it's going to be placed on there, okay? In regards to the seller, I know the buyer's aspect of it.
Hold on a second.
Go ahead.
So if there is like an issue, if your buyer is pushing back and saying, well, work with you, then it's up to you. You can say, hey, I'll split it or I'll cover it for you. Like,
After the 50%, I don't want to do that.
I hear you, but.
Yeah.
And that's it, time?
There's flexibility.
Consider this, right? So you go to a restaurant and they tack in the 18% automatically. Are you going to not take the 18% on it, or are you going to provide the right service to your client to deserve the 18%? So at the end of the day, every agent has a value that needs to be presented to their clients, and that's what we're trying to emphasize on top of that. Okay? More importantly, whatever contribution margin, whatever the 2/3 of it goes towards the contribution margin that needs to be hit by the end of the year. So this also facilitates that differential when we have these one-on-ones and we go over the CM, the contribution margin, the goals that you guys have to reach. So that's another incentive for the actual fees that we're providing as a closing fee, both on the selling side and both on the buying side.
I think what matters most is the way that you present the buyer. If you have a feeling that they're gonna push back on the little details and the cost like that, then you have to be, you have to manage the way that you present that information to them. And make it clear as to
Yeah, at the end of the day, it's if a person is willing to go with somebody else, it's because you're not creating the value that you're supposed to create as an agent. That's as simple as that. If the person is also picky about the fees that need to be paid out, provide them a CD, show them all the fees that are included into it, and they'll be well aware of the fee that we are giving or asking them to pay. It's minimized compared to all the other fees that they already have to pay.
Yeah, but it's very high, like, I haven't come across a fee that high yet. I've come across like 200,
295.
350 is what I've seen for.
yeah, or I've seen 200 transaction costs, I've never seen a 595
is kind of what other corporations do. 550 is a lot.
590.
It's negotiable, right? If they walk at 595, you can say, let me talk to my
CEO,
brokerage."
yeah. So those are the parts, right? So it's something that we're implementing moving forward. Of course, it's the first time we do it. It's never been done before because there hasn't been anybody to implement it, but it's been always in the works, never been done. So we're moving forward with the 595. If, and per the market, we see there's a difference and it's becoming an issue trying to close at 595, then it might be an option to review. But as of right now, to implement this, it's going to be at 595.
Effective date,
August 15th.
August.
Yeah. So again, everybody's going to get an email per each new policy with the new policies. At the same time, it'll be on the back office under administrative docs.
We have to re-download the calendar.
Yes,
As of tomorrow.
as of tomorrow. No, as is, if you guys are using HelloSign, it'll be already implemented in there. If you guys are using .loop, you guys have to download, use that as a new template. If you use .loop and you're putting this stuff inside yourself, just remember to put that part on that line. Again, it'll be indicated on the procedures and policies.
On the features,
Yeah.
not taking any chance.
All right. Any other questions?
I have a question.
Go ahead.
In the event that an agent, after August 15th, forgets to put that in because they're not using our downloadable forms,
Mhm. What are repercussions?
are we going to forgive it, or are we going to be charging the agent the $595?
I still got to talk to OG about that. But it will be decided by today. Yeah. Any questions? No? Any other questions?
I already answered an OG question. Since I'm right here, might as well. This is a new test that we're implementing to basically be able to pay up for more of the cost of marketing. For right now, since we're testing, we're going to see how it works. Given that we have seen, we've done a market analysis. We've seen that we have people that charge $250. We have people who charge $600. And there's people that charge all the way to $1,000. So we've decided to go at the 600 and see how it goes. If it eventually lowers our conversion rate, then we'll go and adapt it. So currently it's a test period. It's not something that we have to particularly worry about. We're not at this time going to charge the agent for anything. We just need to see if it works. My instinct is that it's going to go like a letter to the mail. Is a letter to the mail because compared to all of the other costs, it's really, really tiny. We have seen in the last 2 months, an agent had two 950 by commission and 1,500, and one that was for 1,500. Just FYI, and on top of that, on small properties. Now, it just happened that agent did it at the same time that we were planning on doing this. It was just kind of validating, but nothing, not related. Yes.
Personally, I think it's going to be a big issue. Second of all, more and more buyers are now being incentivized, given money to use a specific agent. So Zillow, Amazon is doing it. Amazon says, you use my agent, I'm going to pay you $10,000 of home improvement. We don't have any incentive, and now not only if you use me, I have to say you're going to pay $600. I have to work really hard to win a client because she's like, well, if the lender and more people are educated now with the internet and everything you can find, and it's like you say all the time, it's so easy to use multiple agents.
Yeah, absolutely.
And most people are using multiple agents.
So
And as good as someone is, like when you throw money in it, sure, it's not gonna matter if you're buying $1 million property, but if you're buying a $200,000 place, and especially if you're looking at a 3% down payment or anything in that vicinity, I know for my client right now that I'm working with, if I sent this to her, that like
in the
that,
so
we don't want to do it.
actually, I think that's it's a very fair point. Let me give the counter argument to this. We first and foremost, discount brokers have existed forever, and actually a lot of them are struggling. Some of them are doing well. Most of them are struggling and shutting down.
On the listing side, right? But not
No. On the iBuy discount. For example, Redfin has offered for a long time a discount. It did okay. Not
But
monumental.
the buyer never pays anything. It's
On
not
the-
a discount, it's literally
No,
money
they give cash
pocket.
back. They give cash back.
Cash back,
They
yeah.
give cash back. It's exactly to the example that you have given. There's other companies that offer cash back with like as low as 1.5% or zero commission, because 1.5 and go back 1.5. A lot of them are struggling. On the sell side, further, I can tell you from experience, people value more the agent than a discount. I can tell you this because we have offered a flat fee of 6,100 in the past, and it was a terrible experience where you ultimately just get the person who is you ultimately get the people who are the pickiest, the hardest, and who really care about a discount but don't really care about selling their home. The people who are really interested in selling their home prefer to have somebody who was really competent without a discount. So in any case, we're currently testing it at this number. If the number is too high, it really affects or etc., it might lower. If it actually works wonderfully well, you keep it, and we'll take it from there. I don't think there is a particular stress. It should have a particular stress on it, because if it works, fantastic. If it doesn't work, we're exactly where we are. So it's like we have really nothing to lose here.
Question.
Yeah.
So how about the transaction fee? How about if I'll take care of the transaction fee? Let's say, I'll take care of it. In regards to the commission, it will be taking out from my commission like 100% or based on.
At this time, no. Like there is no ill effect. Like there is really not there is nothing to lose. Yes, I can see I'll just track it down every single time. I'd encourage you not to do this. There is a clear benefit.
If the client is good, I'll take care of it. But I usually give client with
Sure. Look, there is nothing to lose here. There is only things to gain. So it's not I would
benefit
think.
for helping us cover the.
Absolutely. It will basically put it. It will help us. Yeah, exactly. And it will help us go into read better. And the guy who keeps on calling me is right across the door, and he keeps on calling. I'm right here. All right, give me a second.
So going back to it, the benefit that you guys also have to understand is a goal towards the contribution margin you guys have. It is a test run. It is going to be hard copied on the contracts, so be aware of it. That's what I'm trying to put into it.
Here, hold on just a second.
The test run would go forward for at least, I'll let you do a quarter of this. So we'll go forward for a quarter, you'll get reassessed. I'll see if you see the conversion rate coming down from the 18 to a 16 to a 12, then it's something that we would review. The idea is to figure out the best way, one, to increase revenue, provide value at the same time, the value that's supposed to be given by agents to the client, and then add some more contribution to your margin. Because the year is coming, and then as the year comes, we are going to reevaluate all the agents if they reach a contribution margin or if they did not. So that's more of a incentive for you guys in the long run.
And I don't think it's something that when you're working with your buyers, you're going to tell them right away, oh, by the way, I'm going to charge you $595 once we find the property. That's something that's going to be on the contract, that you're going to explain to them what once they fell in love with the dream house, so it's gonna be that much easier to charge this fee. If it's a good person that's like a $500,000 buyer, I think we can put that in our commission, because we're not gonna lose 10, 14,000 for $595.
And part of it, is like at the same time when you work with a client, do they tell us like, oh, how much is the title fee going to be, and can you break down everything else off? If that's the case, then even better, you have a comparable. This is what the title charges you, $795. The lender's going to charge you $895. We're charging you $595. It's a little bit more spread out that way, right? Alan?
From a legal perspective, can you disclose it directly on the audit of the contract?
Yeah, what's that in the contract?
Because then they did not agree to it.
The number is there though.
They're already a day before closing. I mean, it's not.
I think the legal aspects of it.
But if
I'll let
it's
you- I'll let
Let me
you-
talk to an attorney, because my understanding it has to be on the contract for legal purposes, but the way it gets, because
because
on the terms,
the closing disclosure goes out, and it has to be.
Yeah, I'm
Signed.
everywhere, and they're not gonna be looking at every, what people do.
But like, let's say it's somebody that reads everything and they're like, hey, that wasn't on my closing disclosure.
You know what, if I have a
That's why I say from a legal perspective,
for
how
all the friends,
legal
I'm
it is.
so amazing, and I'm making money.
I would say if it's on other,
which is what you have to do originally as
because
an
when it
agent.
comes out the lender, like I have lenders that explain it as well, listen, these are all your fees and it's just one of your fees.
And when it comes to the fees, I got to double check with the lenders, but I believe they give them a proposal, they see it on there, and it's signed. Same when we give them a contract.
Let me perhaps put it in an easier way. There is 25,000 transaction a year in Miami. We are by far the exception. We're by far the exception by not charging. The vast majority of brokerages charge a closing fee. It's a
with the brokers that do like 100% commissions and then they charge you $695. But if you're talking about 50,
happy. If you want to have the breakdown of all of the different commission structure and all of the different commission structure and all of the different fees, and they all charge fees. Like whether it is as royalty fees or as closing fees, they all charge a fee. We are the only idiots who don't. Like
For example,
basically.
Keller Williams charged $295 plus a 7% royalty fee on top of that, before it even gets to the agent. So, and then Sotheby's, I'm not sure.
One Sotheby's charge, and they're going to get their fee no matter what. Like they're like one way or another, they're going to get their fee. And one Sotheby's charge, and it doesn't matter what your commission is. Like and. You still get fees. You still have fees.
Yeah, but the fees are based on the fact that they're not making a commission.
But
So they still charge for each transaction.
you still have the fees. We need to get to a certain level, which is first of all not easy to reach, and then you still have fees. So we look. I've literally looked at all of the commission structure back and forth yesterday. All of them has transaction fees. We are the vast minority to not have them, and you'd be surprised. Even the ones that give rebates still have hidden fees that come back right behind it. So even the ones that give back money, they still have more fees to be able to make it happen. I'll give you actually an example, even from an e-buyer from Open Door. You know, Open Doors, they say they buy your house at full price, and then checks on the money. Well, it turns out that there is a transaction fee that's worth 8%. So they don't actually charge 6% of commission. They charge us 8% of transaction fee, which is exactly the same fucking thing plus 2% on fees. So, yeah, money has to come from somewhere. That's basically it. So we are not even like adding something on top of the market. We're basically getting to market level. So I think I understand it's a new change, etc. And people are like worried about it. We're just getting to what everybody does. So it's not that distinctive. I will add just a few more announcements on top of what Carlos was saying. We currently have two positions open that we're looking to fill out. If you know anyone that can fill it out, it's for 2 internship. Ideally, somebody who is currently in college or just graduated from college and still needs to do an internship for a marketing position, it's going to be somebody who's going to be helping us coordinating the marketing, helping us with social media, organizing the event, organizing all of the basically the marketing for the company, for the agent, for the launch, and on and so forth. And actually, the other intern is for me personally for properties I own. My property manager went and died, so I needed somebody else to help me. I own 5 properties, and I don't want it to take its time away from Home 61, so I'd rather have an intern just take care of it. But that person cannot be related in any way, shape, or form to Home 61. So the only thing, he might be at the office, but will not be a Home 61 person in any way, shape, or form. So if you know anybody, if you have a little cousin who really wants to learn how to work, if you have somebody who is love about social media, would dream to become a social media influencer, and could really use an account of 9,000 followers to get to learn, we're currently open with that position.
Well, the next talk that we're going to have is one you guys requested, which is the ABCs in investors. Working with investors, right?
Yeah, ABCs of working with investors. You guys made the request the last time, so we're going to cover what are like the keywords that they're going to use, what do they mean, how do they think, what are the different type of investors, how to help them, and perhaps the more important is like what do they expect. So, because if you don't speak their language, you're not going to be able to work with an investor. I'm going to be doing this with Maria, who actually just graduated from a course in investment, and it's a brand shiny new logo and nomenclature, which I forgot, but it was very impressive. And
for the record, I left that course with more questions than answers.
and then we have yet to decide what's going on in 2 lunch and learn, if I'm not
At the
mistaken.
beginning of September, we are probably going to get another vendor, but the next one we're going to do is another Home 61 all over time management. This is more focused on time management for your pipeline, taking leads, and the one-on-one time management when you're working with a client directly.
Absolutely.
To spread out, pretty much your showings, how to prepare your showings so it works best for you guys efficiently.
All right.
That's about it.
Any more
And
questions?
The role playing.
And now we have the session of role playing. It went really well the last time. It was really cool. So I encourage all of you guys to come and participate. The role playing is on the regular subjects like welcome call and objection management and so forth. So if you follow me to the next room, we might take a 5-minute break for drinks and bathroom and whatnot, and let's get to it.